Thank you again, Alan.
Any more?
No, sir. Thank you. All right, all right.
Not yet. It broadcast.
Okay. Can you see us live?
Social media.
I'm trying to figure out where are we? Are you there?
Hasn't been on the TV yet.
There we go. Can you hear me?
But it's on the
Sure.
All right, all right. Good morning, good morning. So are we live?
Here we are.
Awesome, fantastic. Once again, good morning, good morning. And as we were chatting just before we went live, I can't believe this is episode 24.
That's pretty amazing.
Pretty good considering, yeah. Seriously.
Well, I would say, yeah, I would definitely say considering still in the global pandemic, right?
Yeah.
But you know what? With anything, consistency is key. So
It
who
matters.
knows?
Makes a difference.
Let's see if we can get it to 50.
We're gonna do it. That's our goal. That's our goal. So next week though, Christmas. I just realized this morning that next week is actually Christmas, next Friday.
Yeah.
So our next show will be a week before. I got background and chatter, so we got us an audience. So yay! But it
Live in the studio audience.
Studio audience. That's right. That's right. So happy holidays to everyone. Merry Christmas. I know Hanukkah ended yesterday. I believe it was.
Okay.
So we've got all, we're preparing for Christmas. Are you ready? Santa coming to your house?
Yeah, I knew you were about to ask me that next, and I was like, I hope she doesn't ask.
Of course
I am not. I am fully clothed in clothes right now to make sure I have on my go shopping last minute outfit right now.
Good girl, because
so when we get off of here, I will be making a dash because totally not ready. I mean, I've ordered stuff online and forgot what I ordered. I don't know. It's just it's not good. But you're looking festive. Happy holidays, which I see with the blowout,
Hey, did you see my videos last night? The girls.
I did. I said, look at those girls.
I said, you know what? I'm good. They every morning they're like, oh, Jenny, do you have to wear the bun? So I said, okay. I washed my hair. I think after yesterday, and I said, all right, who does it? We part the bad boy down the middle, and one had one side and the other.
One had the other. Well, typical girls, but just kids in general, they will let you know when your stuff is not right. They
will let you know that they're brutally honest. And actually, I don't want to say to a fault, but it's good. And that's what I love about the innocence of kids. They speak their mind. You just got ready for their truth. What's going to come out? Anyway, let's, this week, Marquita, I thought, because I had a question from one of our star pupils, I'm going to say, who's actually been doing quite well, and I think you will agree, in managing and following all the steps to become a first-time home buyer. And this week she had a few questions, and I said, you know what? Great topic for this week. We may have visited it in some form in the past, but it's always good to revisit, I think. And that is the steps to preparing or obtaining a mortgage loan. There's so many little pieces, and honestly, even with folks that today, I mean, it does bear repeating because there's always the same questions. What's next? Why does the loan officer ask? Why are they asking all this information or wanting all this information? I just want a pre-qualification letter. Why do I need to, divulge all my personal information? And I just want to get out here and go, look, I know I can afford this amount of house. Well, my question is, really? Do you know? And then my response is always, just because you can qualify for that $1 million house, either way, we still need to verify that you can. And you may not want to buy $1 million house, but nonetheless, you guys need the information in order to determine if they are qualified. But also I want to put in that point as well is having the pre-approval in this climate or in this seller's market, it is what it is. If you walk in the door with a pre-qualification, your offer may not even be entertained at all, because if you have a strong listing agent, she's going to do her due diligence. She's going to follow up, but we can read the letters. We were talking about that also earlier, is sometimes these letters that you get from some of these lender in the box, if you will, or these online platforms, and you put in whatever it is and they spit you out a letter until you go shopping. I mean, you can probably speak more to that, but let's talk about the steps, what it takes to get a mortgage loan.
Paperwork, honestly. It's a very document driven process, and that is problematic, for some people. So if you are preparing to get a mortgage, there's 3 areas that we're going to review, and I call it the CIA. And just like the CIA, we're looking at everything. Absolutely. Right? We're looking at everything, because the last thing that we want is to have someone shopping for a home only to find out that there were some details that were missed in the pre-qualification and the pre-approval. By the time a loan actually makes it in front of an actual underwriter, depending on how most processes go, you're already heavily vested into the transaction. Home inspections have been done, appraisal probably has already been paid for, and now emotions and time have been invested. So it's always best to do the due diligence up front. I had a gentleman, I was fired before I got started. He fired me, and he fired me because he did not want to provide the requested paperwork based on the scenario. It is not enough just to look at, like I said, there's 3 areas, CIA, it's credit, income, and assets. And to have a thorough pre-approval, someone should be looking at all 3. Absolutely. And there's some interchangeability with the word of pre-qualification versus pre-approval. We have been told by the powers that be that we should not say pre-approval unless an actual underwriter has reviewed the file. However, we know that those words are interchangeable on the street. So I don't get caught up in the semantics of the regulation of the word. At the end of the day, a true pre-approval to me means you have turned in credit, which is a mortgage credit report, not your credit report from CreditWise, Credit Karma, Credit Sesame, Credit whoever. So you've done a mortgage credit report because our scoring models are different. Right. You have given information to verify your income. And to do that depends on just how you're employed. If you're an employee, then you need pay stubs and W-2s. You're going to need 2 and 2. 2 pay stubs are paid every other week, and 2 W-2s to show you've been working the last 2 years. If you're self-employed, 2 years tax returns. So that's the income part of it that we have to review. And the last part is assets. And people always worry about that sometimes. They're like, well, is she looking to see if I have, $1 million, or if she sees that I have more money, are they going to ask for it in the transaction? No. There's a couple of things we're looking for. Do you have money for a down payment? Do you have money for closing costs? Do you have a thing that are called reserves? Meaning after you close, do you have some money in a reserve just in case things don't go right? Do you have a couple months of that new housing payment just sitting in the bank? So make it really easy. Credit, income, and assets. If you're not prepared to turn in pay stubs and bank statements to a loan officer, the bare minimum, then you're not really out here as a serious buyer. I literally had a letter that came across from a competitor, and on the letter, it clearly said income and assets not verified. Only thing was verified was the credit report.
Wow.
And as you mentioned, a thorough listing agent in a market that is saturated, we don't have enough inventory, a thorough listing agent, that offer, even if it's the best, is probably already tossed to the side, because they know that no true due diligence is done, and that pre-approval, pre-call, whatever you want to call it, is not worth the paper it was written on.
Correct.
Right. And then a good listing agent actually is going to call. And I'm like, don't ever have me in a situation where, first of all, I'm not going to write the letter, if I don't do those things. I'm just not going to write the letter. So, right? So it's not even like they're going to call me, because I can't give you the letter if you're not willing to do your part in turning in your income and asset information. Like I said, it was a huge red flag. I'd asked for a short laundry list of items from a gentleman, and he told me, you know what, just withdraw my application because the other
See,
lender
that's
didn't ask.
suspicious. That's
And I was
suspicious.
like, well, that's a red flag right away, right? Wouldn't
Yeah,
you want to have your due diligence done up front versus after the fact? So it
right,
was fine. You know what? At this point, this is a season where buyers have to be coachable. And if you're not willing to be coachable or, play by the rules that we're setting as the experts, then it's time to move on. And
right.
that's just something I've learned very early on. Anytime I've tried to press a situation or the buyer was coachable, it never fails. Something goes wrong.
Mhm.
Something goes wrong. So it just kind of is what it is. So those really are the steps. It's a very paperwork driven process. So you do have to be on top of that. So if you have pay stubs and you're just trashing them, you need to keep them. You need to know where your tax information actually is. As far as bank statements, I know a lot of stuff is electronic, so it actually should make it easier. We actually have systems that will allow us to,
Mhm.
with your permission, just sign in and pull your bank statements out of there
Right.
for 1 day certainty, just to make it easier. Not everybody's comfortable with that. So we've tried to make it easier, but it's all about what can you verify by paper. We
Right.
don't care what you tell us.
That's right.
Okay, you can tell us anything, and it
That's
could be
right.
the greatest dissertation or explanation of everything. If you can't prove it on paper, it doesn't really matter.
It's just like kids applying for college. I tell them these people don't know you. They don't know what your story. They don't know your story. All they know is what you show them, what's on paper. That's how you're judged. And the
Okay.
same as you mentioned with the mortgage. You don't know. I mean, we can tell you anything. Yeah, I got $1 million sitting in my account, but you need to verify that. With that said, let's go back to so how many, let's go back to when you talked about what was required. So we need to set up these reserves, and you've got to check. So what's the steps again, specifically? How many months of, are you going to look at the bank statements? How many pay stubs do you need to see? And, just kind of run those down again.
So yeah, in general, my reach out is going to, if you complete an online application with us, our toolbox immediately is going to ask for 2 years W-2s or tax returns if you're
Years.
self-employed or employed, 30 days worth of pay stubs, and whether that's one pay stub, two pay stubs, or four, it just depends on the frequency of your pay. You just need to be able to cover a 30-day period. So if you get paid every week, obviously that's 4 pay stubs. And then for bank statements, ideally we would like the last 2 months with all pages, even the one that says intentionally left blank.
Right.
Okay. So
Right.
intentionally left blank also is one of the pages. So 2 months bank statements. As far as reserves are not required on every loan. But I like to, if there's an account, if there's retirement or anything like that can actually show those reserves, we like to have it. And whether someone needs reserves or not, again, always depends on the overall profile. But it's always, better to have them if you can, right? I mean,
Right.
it looks better overall.
I have another question. So what about a gift? For example, needing a down payment, or let's just say, because we get that quite a bit, first time home buyers, family wants to, I've got a buyer now, and, parents are going to help with the down payment. So explaining, because I know this always comes up at some point, is why does my mom have to show her bank account? Or, if I'm getting money, why does that person have to prove that they gave it to me, or that that's seasoned money? Or can you just elaborate on that some?
First of all, God bless anybody that has a parent or family member willing to give them a gift in these days. That's pretty awesome, right? Kudos, right?
Yeah.
All right, good stuff. However, the gifting depends on the loan type.
Okay.
And so how and what you need to prove as the donor or the gift giver is going to depend on the actual loan type.
Okay.
Well, many of our buyers, first timers, are using FHA loans. If they're not veterans and they're not going conventional, FHA is very popular. And FHA has the most strict guidelines to me as far as proving a gift and where that's actually coming from. So the challenge is what happens many times is that mom wants to give the gift, but mom doesn't want you to see those millions of dollars in her bank account, right? Like you might be ready to offer for the inheritance.
Yeah.
So she doesn't want to provide the full bank statement. Well, there was a change by FHA as far as how gifting goes that the donor does have to provide their statement, okay, their 30-day statement, and show where the gift came out. Now, why you say, why is that important? It goes back to a seasoning issue of funds. I mean, I think there may have been some auditing of loan files, and how can I have average daily balance of $2, and then on the third I get $10,000, then on the fourth I gift it to my daughter, and I never really had it to give in the first place.
Correct.
So I think it goes back to want to crack down on some loan fraud, on whether things are truly being gifted or not. Now, the donor can decide to do whatever they want as far as how they obtain the gift, but they do need to be able to paper trail it. Like they still need to, can't just have the money in cash. And that's our whole thing. Right. So if the donor decides to take a loan against their 401k to give the money to their daughter or son, then that's perfectly fine. But you do have to be able to paper trail it. And at the end of the day, it is proving the ability that you had the ability from the start to get the gift. And it just wasn't all of a sudden a cash influx, and then this cash is being gifted out. So you have ways around that on the other loan types, but many times that's a point of contention with FHA loans. And I tell people that up front, and also give the opportunity though to said donor to bypass the actual client. Like, you always can send us the statement direct. That's not a problem. If you don't want little Johnny or Susie involved in that part of it, then you can bypass them. Obviously, we wouldn't divulge the information in there. We're just trying to, again, keep that paper trail on point.
Keep it going, keep it going. So now, what can a borrower do? My last question: what can a borrower do to prepare in advance of coming to you?
Well, I think everything has to go back to credit, right? Because I think that's the first key, is really monitoring and understanding what is on your credit before you open Pandora's box with the lender. Right? It's much easier to update things in advance versus updating throughout the process. Or, and in some cases, people actually do need a roadmap. So I get that, but it really does start with the review of credit. I don't care how much money you make. If you have a 450 score, we're just not doing a loan. Right. If you have a 550 score, we're just not doing a loan. At this point, for me, if you have a 580, I might not do a loan, because that just still shows that maybe there's some things that need to be addressed. I, as a lender, never want to put someone in a situation where they're either going to be house rich or cash poor, or something about this profile shows the inability to pay things on time. And we know that, a house, you pay, you stay, you don't, you go. That's right. That's it. They're knocking on the door. There will be a sheriff sign out, a little notice out there, and moving right along. So credit. Literally. Definitely, looking at credit, figuring out what's there. And even though those scoring models are different, they are pretty accurate on whether an item is negative or not. Right. And I will say in defense of a Credit Karma, which I actually started using, because I was like, what is it with these clients and this app? I said, you know what? I'm going to go ahead and sign up. And I love the aspect of monitoring our credit. When I started in this business in 2002, people had no clue what was on the credit report. Actually, you didn't even, for real, you needed a score, but you didn't need a score. Like, this credit scoring being, filtrated into our market so heavily is something that happened over time. Yeah. Right? It really happened over time, where that was the determining factor. Like, back then, you could get a loan through at a 550, because it wasn't just the know all end all. If you could have some reasonable explanations, if the loans made sense, if it had common sense, then possibly you could get it through. But now credit is everything. So I'm like, I started using Credit Karma as a monitoring tool. So if something did happen and someone, fraud is very rampant, medical collections, even a person with the perfect credit can end up with some type of copay issue. So at least I will say in those sites' defense, that they do help you keep on top of these things, where something's been sitting there for 4 or 5 months and you had no clue it was there, and is dinging your score every month, but you didn't know because you weren't monitoring the information. So the actual score, I kind of throw it out the door, but the monitoring of what's happening with your profile, I really like that aspect of it. And it's free. I mean, the flip side of it is, when you allow them to give them that information, they're going to solicit you for all type of credit offers. And in some cases, those can be good. In some cases, maybe not so much, but that's the trade-off for being able to use their site for free, is that they're selling your profile, your data to creditors to make you solicit offers to you, which, like I said, again, it's all about management. I looked at one myself. I was like, hey, this looks all right. I got this one last card I'm trying to get rid of, and it's a zero balance transfer for 12 months. I was like, I got to look at it. Then I go, you know what? Maybe I'm turning into my clients here. Log off, log off.
I got an offer in the mail last night. I looked at that. It's actually a card that I have. It's like, oh, zero, whatever, transfer back for it.
Yeah.
Month. And I thought, I might take advantage because I actually have the card. I'm not applying for new credit. So
right. You already had it. Yeah. So, I mean, a zero balance transfer.
Yeah.
I mean, that's kind of a no-brainer.
I agree, right? Save me some money in that respect. So you mentioned that your credit scoring model is definitely different, which I do know. So yes. How do we articulate that to say that first-time home buyer? Is your scoring model going to be more conservative? Is it more liberal? So what does that mean in comparison to your Credit Karma?
That's honestly a heavy question. At the end of the day, I think you just have to say it just what we said. The scoring model used on Credit Karma is different than the scoring model in the mortgage industry. Right. I would have to say, from our vantage point, definitely is more conservative on what they're actually giving you points for and what they're scoring you on. I would say if you had to label it a name, right. Yes, it's more conservative, because typically someone getting these credit offers, as far as what Credit Karma serves you, we're not talking hundreds of thousands of dollars. We're talking, $20,000 credit card. Well, a magnified 20,000 times 10 at 200,000 for a sales price. And I mean, on a mortgage, and that's very low. We're talking hundreds of thousands of dollars. So, it's a song, and they talk about it. It's like, hey, baby, it's levels to this. Okay. All right. So it's levels to this thing. Uh-huh. So I would say if you had to rate it, it's more conservative, no doubt. Like, we're not necessarily going to, get the same points.
Borrower that maybe, that's right on the cusp, that's right there, that, Credit Karma and all three, we all know that they don't talk to each other. So guys, if you hear me, those three different credit bureaus do not communicate with each other. That's why you have three different scores. But exactly. Just for the sake of this conversation, let's say all three were on the same page. They're all right around 320 or 620, 621, 622, whatever, or across the board. What does that mean if they come to the loan off to you, and then your model have them at 619? How do we do that? I mean, what happens?
I mean, it just is what it is. Like that's the challenge of it, right? Like, whatever they're giving you points for to make that number higher, they're using what's called a Vantage score. We're using the Fair Isaac or FICO,
right,
20,000 trillion versus the Vantage score. And I've noticed that they've started letting people know that this is a Vantage score, but then they just don't give them that other line that says, and a Vantage score is not the score used when actually buying a home.
Yeah, actually,
that's the line they need to add. Like, they let them know it's a Vantage score, which whatever Vantage means, I'm sure you could Google and look up what they're giving points to. When that actually happens, though, if someone's right there, I mean, typically we're going to look at what can we try to do to manipulate the score, right, to get those extra few points. And I find with the Credit Karmas, the higher the score is on the Credit Karmas and the Credit Wise, they're going to be fine with us.
Yeah.
It's that when that score starts hovering around, that below 640, then there could be, some variance. Like, if their score is 640 with them, maybe it's 620 with us. So it's like the variance makes a huge difference between qualifying and not qualifying. So I'm just telling people up front.
Like you said, it's all about educating the borrower, doing your due diligence, and guys, understanding that your loan officer is going to ask questions. CIA, that's going to stick with me. They need to know your credit.
We are the CIA.
Yeah, that's right.
We do have a client. We have a question from Amy. She wants to know, do clients get a copy of the lender pool credit report?
Good question.
Yes. So you get two things that actually happens when a lender pulls your credit. A score disclosure should go out within 48 hours, 72 hours of that happening, and on that, it's just going to be the disclosure of what your scores are. Mm-hmm. The actual credit report yes, the lender can send out a consumer copy to you of the report. So you ultimately love to have it be just one item where it's the credit report with the scores all on the same page. But technically, depending on the agreement you have with your service provider, you don't actually send that copy. You send the consumer copy, which you have a score disclosure, and then you have the consumer copy that has all the data and how, what they're using to score that. So yes, you definitely can get a copy of the credit report. But you get, like I said, it's a twofold thing.
Okay. Well,
Yeah,
thank you,
good
Amy, for
question.
that question. We appreciate it. Any other questions? Do we have any questions from my audience?
From the studio audience.
The studio audience, before we sign off for this week?
All right, hold up the sign in a minute for applause. Applause.
Yeah, I do. Yeah, we need that, right? Yeah, what we got? What we have here? What we have here? Here we go. There we go. There we go. Clap, clap, clap. So no questions. Did we get your questions answered? Yeah, we had some questions. Okay, good. Well, thank you and congratulations on completing episode 24. I'm excited
Yeah.
about the new year, in which we're going to roll out. We're going to have some more topics for you guys, and we're going to bring on we're going to invite some other folks to join us. Specifically, I've already got an accountant or a bookkeeper, which I think will be very timely in the new year, getting ready for tax time, but also just about record keeping and things like that, and preparing for your loan officer when it's time to start buying. So
Right.
we're going to roll out some other things there. But again, thank you so much. I wish you much success. We just going to do this like virtual pound, because you and I both are going to have to go out here and hit this pavement.
Yeah. Like I said, happy holidays, but it's go time at this point now. And I'm just at a loss though. I know I ordered some stuff. I don't know whether it's gonna be here before. I don't want anyone to be disappointed. So I'm like,
gotta have something.
I ordered something from Apple. I thought it was it came in, but it was my apple cider vinegar gummies or something.
Oh, the goalie. Did you get the goalie?
I did, but I'd ordered those way back, like Black Friday.
I actually have been looking and looking into that. Huh? Yeah, you got to let us know that our audience wants.
Oh no, I like them. This was a refill for me.
Good. Oh, okay. So I wondered because I thought I saw them at one of the with Sam's Club or Costco.
Okay, no, I'm thumbs up. Like it says it has some benefits. They really do taste like gummy bears. So.
Oh, good. I can OD on those. That's not a good thing because I like eating gummy vitamins.
Well, you could definitely pop those down. No issues, no crazy aftertaste or nothing like that.
Drinking that stuff is like, and I like.
Oh, I know. I ordered my great greens, but I will not even front and act like I've actually used them.
Okay. Well, great greens. That's that's a great stocking stuffer. But the idea is to use it. Quite honestly, I have been using it, and then I slacked off this week. I think both of us slacked off, didn't we, India? Yeah, so I'm getting back on that. But yeah, so anyway, happy shopping. Merry Christmas to you and to everybody that joined us. Remember, always put your questions out there. Thank you, Amy, for joining us and your question. We appreciate you sincerely. And that's a shout out to we've got, what is it, title?
Yeah, Amy Grant. She's with Ratified Title.
Yeah, Amy, we'd like to bring you in on one of the conversations.
Yes, absolutely.
So please
absolutely
put that on in the back of your mind, because we will reach out to you, because certainly there's so many layers to the home buying process, and we want to make sure that we certainly, again, bringing relevant information and showing, being the resource to folks out there and answering questions about home ownership. So thank you again. Merry Christmas. And I'll see you next week.
All right, see you. Happy holidays.
Happy holidays.
All right.